Welcome to the Wednesday edition of Tech Stocks Daily, your go-to source for all things tech on the NASDAQ. Today we're diving into Microsoft's ambitious moves in artificial intelligence, including a groundbreaking partnership and a hefty investment plan that's set to reshape the global tech landscape. But that's not all. Google finds itself in the midst of a fiery labor and ethics debate, while Apple gears up for a much-anticipated earnings report amidst a tumultuous market. And for our daily pick, we'll take a closer look at why Microsoft is dominating headlines and what it means for investors. Buckle up, it's a roller coaster of innovation, controversy, and anticipation in the tech world today. Let's get started. In today's tech landscape, Microsoft is demonstrating why it's not just a participant, but a pace setter in the rapidly evolving field of artificial intelligence. Two stories dovetail to highlight the company's current prominence: an intensive collaboration with Sanctuary AI to propel the development of general-purpose robots, and a massive $1.7 billion investment plan in Indonesia focused on AI and cloud infrastructure. These narratives underscore Microsoft's strategic positioning at the forefront of global AI initiatives, weaving a compelling tale of innovation, collaboration, and significant investment in future technologies. Kicking off with the game-changing collaboration between Microsoft and Vancouver-based Sanctuary AI, this partnership is aimed at accelerating AI development and creating human-like intelligence for general-purpose robots. Sanctuary AI's initiative, powered by Microsoft's Azure cloud resources, targets the development of large behavior models. These are sophisticated AI models that enable robots to understand and interact with the physical world in unprecedented ways. The partnership encapsulates a shared ambition to solve one of the most formidable challenges humanity faces, creating robots that not only comprehend the human environment, but can also perform a wide range of tasks autonomously. This collaboration is remarkable for its visionary approach to robotics and AI. Sanctuary AI, bringing to the table its rich legacy in robotics and quantum computing via its founders' backgrounds, aims to integrate its Phoenix robots with advanced behavioral data through Microsoft's Azure. The end goal is to deploy humanoid robots capable of undertaking over 400 tasks across multiple industries, showcasing the tangible benefits of fusing cutting-edge AI with practical, everyday applications. The synergy between Microsoft's cloud computing prowess and Sanctuary AI's ambition could very well redefine the boundaries of AI and robotics, posing solutions to labor challenges and opening new avenues for efficiency and safety across various sectors. On another front, Microsoft's announcement to invest $1.7 billion in Indonesia captivates as an ambitious endeavor to supercharge the Southeast Asian nation's AI and cloud service capabilities. This broad-scale investment plan not only signifies a monumental input into Indonesia's digital infrastructure, but also includes training for hundreds of thousands in AI, thus emboldening a future-ready workforce. As the largest economy in Southeast Asia, Indonesia stands on the brink of a digital revolution, with Microsoft's investment poised to catalyze significant advancements in AI research, innovation, and application across the country. This move is emblematic of Microsoft's strategy to foster global ecosystems conducive to AI and technological advancements, marking a pivotal step in the global march towards ubiquitous digital transformation. Microsoft's dual thrust, partnering with Sanctuary AI and investing heavily in Indonesia, paints the picture of a corporation that is relentless in its pursuit of technological frontier expansion. Through strategic collaborations and investments, Microsoft is not just shaping the future of AI and robotics. It's laying the groundwork for a world where AI's potential is fully unleashed for the betterment of society. Google has found itself at the epicenter of a major labor and ethics controversy, making headlines for several reasons today. The tech giant is under scrutiny due to its decision to fire approximately 50 employees in response to protests over its cloud computing contract with the Israeli government, known as Project Nimbus. This high-profile incident has sparked debates about workers' rights, corporate ethics, and the intersection of technology with geopolitics. Project Nimbus is a $1.2 billion initiative in which Google and Amazon are providing artificial intelligence and cloud computing services to Israel. Critics argue that this technology could be used for surveillance and military purposes, potentially contributing to the ongoing conflict between Israel and Palestine. The controversy intensified last month when Google employees organized sit-ins at the company's New York City and Sunnyvale, California offices, voicing their opposition to the company's involvement in the project. These protests were driven by concerns over the ethical implications of their work and a desire for the company to adhere to higher moral standards. In response, Google defended its actions by emphasizing that the dismissed employees had disrupted workspaces and made their colleagues feel threatened and unsafe. A Google spokesperson described their behavior as completely unacceptable, highlighting the company's stance that these terminations were justified due to the nature of the protests. However, this has not quelled the dissent. Instead, it has led to a broader discussion about the rights of employees to protest and the responsibilities of tech companies in global conflicts. This situation culminated in dozens of former Google workers filing a complaint with the U.S. National Labor Relations Board. They argue that their dismissals violated their rights under U.S. labor law, which protects employees' ability to engage in protected concerted activities for their mutual aid or protection. They contend that their actions were a form of protest directly connected to their working conditions and the ethical concerns surrounding the use of technology they helped create. Amidst this controversy, Google's parent company Alphabet has also made news for joining the elite $2 trillion market capitalization club, thanks to its advancements in artificial intelligence and sustained revenue growth. This achievement places Alphabet among the ranks of the most valuable companies globally, emphasizing its significant influence in the tech industry and beyond. However, this financial success story is now juxtaposed against the backdrop of the ongoing protests and the ethical dilemmas it faces, highlighting the complex challenges that come with such immense power and influence. In conclusion, Google is at a crossroads, facing internal dissent from its employees over ethical concerns and achieving monumental financial success. This tension underscores the broader debates within the tech industry about corporate responsibility, the ethical use of technology, and the balance between profit and principles. As this situation continues to evolve, it will undoubtedly serve as a critical case study on labor relations, corporate ethics, and the role of tech companies in society. In today's tech buzz, Apple has once again captured the spotlight with a slew of updates and expectations swirling around its fiscal Q2 2024 earnings report, scheduled for release on May 2nd. The focal point of discussions has been whether Apple can outshine amidst the iPhone sales slump and how it could potentially shape the trajectory for ETFs with significant Apple allocations. With its market capitalization casting a long shadow over the tech sector, any move by Apple sends ripples across the market. Despite experiencing a 7.6% dip in its shares over the past 3 months, analysts are leaning towards an optimistic outlook. This hope is fueled by positive earnings estimate revisions, hinting at a possible earnings beat. The performance of Apple affects not just individual investors, but also forms a critical part of the strategy for ETFs invested heavily in the tech giant. With ETFs like the Technology Select Sector SPDR Fund and the Vanguard Information Technology ETF, among others, keeping a close watch, the potential impact spans across the board, influencing investment decisions far and wide. In the backdrop of anticipated solid Mac sales and a burgeoning services business, Apple is expected to spotlight an improving PC market and steady growth avenues. Interestingly, despite the challenges faced in the smartphone segment, particularly in China, Apple's venture into diversification through its services and wearables unfolds a narrative of resilience and innovation. However, it's not all smooth sailing. Apple recently admitted to a recurring glitch affecting iPhone alarms, a minor hiccup that nonetheless reminds us of the continuous need for technological refinement, even by giants like Apple. The acknowledgement, without a fixed timeline for the resolution, has sparked conversations around quality control and user experience, areas where Apple traditionally excels. As we inch closer to the earnings call, the anticipation is not just about the numbers, but also the strategic direction highlighted by Apple's leadership. Will there be new revelations around product developments or AI advancements? How will Apple's financial health and strategic endeavors shape investor confidence and the broader tech landscape? Beyond the numbers and forecasts, these developments resonate on a deeper level, reflecting Apple's enduring influence on tech trends, investor sentiments, and consumer behaviors. With every product upgrade or earnings report, Apple doesn't just dictate its course, but also subtly steers the direction of the tech industry at large. So, what are your thoughts on Apple's upcoming earnings report and the surrounding buzz? Do you think Apple will manage to surprise us amidst the iPhone sales dilemma, or are there other areas within its ecosystem you're more intrigued by? Drop your comments below and let's delve into the fascinating world of tech innovations and trends together. Let's zoom in on Microsoft and assess whether it's a buy, sell, or hold, given today's news. Microsoft is in the spotlight for its big moves within the AI and global tech landscape, marked by 2 significant occurrences: its deep dive into artificial intelligence through a strategic collaboration with Sanctuary AI, focusing on developing general-purpose robots, and the whopping $1.7 billion investment plan in Indonesia aimed at boosting AI and cloud infrastructure in the region. Here's why Microsoft is looking more like a buy than ever. 1. Strategic investments in AI and robotics. Microsoft's collaboration with Sanctuary AI to engineer human-like intelligence for robots is not just futuristic, it's game-changing. This partnership is geared towards creating robots capable of understanding and interacting with the physical world in unprecedented ways, emphasizing Microsoft's position as a frontrunner in the AI race. This kind of innovation has the potential to revolutionize several industries, from manufacturing to healthcare, by introducing advanced robots to tackle complex tasks. Companies at the forefront of such transformative technologies generally offer promising growth prospects to investors. 2. Global expansion and infrastructure enhancement. Microsoft's significant investment in Indonesia indicates a strategic move to strengthen its global footprint and cloud infrastructure. Given Indonesia's status as Southeast Asia's largest economy, Microsoft's investment is likely to catalyze substantial advancements in AI, cloud services, and digital transformation in the region. This kind of international expansion not only diversifies Microsoft's revenue streams, but also solidifies its position as a global tech leader, potentially boosting its stock value in the long run. 3. Market leadership and innovation. These initiatives reflect Microsoft's ongoing commitment to innovation, strategic growth, and market leadership, especially in the burgeoning field of AI. As AI continues to be a critical driver of the next phase of digital transformation, Microsoft's proactive stance could significantly enhance its competitive edge and market valuation. Given these developments, my stance leans towards buy for Microsoft. However, it's crucial for you, the listeners, to conduct your own research and consider your investment profile, risk tolerance, and the broader market environment before making any investment decisions. Remember, while the future looks promising for Microsoft, the stock market is inherently unpredictable, and all investments carry some level of risk. So, what's your take on Microsoft? Are you swayed towards buying, or do you have reservations? Either way, keeping an eye on Microsoft's journey in AI and global tech initiatives will be fascinating. And that wraps up today's whirlwind tour of the market's tech highlights. From Microsoft's bold strides in AI to Google's ethical challenges and Apple's anticipated earnings spotlight. The day was a mixed bag of advancements, controversies, and expectations setting the stage for tomorrow's tech narratives. Dive deeper, question more, and stay informed with us. Don't forget to hit the like button, subscribe for more daily tech news, and share this video to keep everyone in the loop. Be sure to return tomorrow for another roundup of the tech world's latest. Keep tuning in, stay curious, and let's navigate the ever-evolving landscape of technology together.